You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the OptionsInsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-exciting Options Insider Radio Network. And if you haven't had a chance to check out all of our latest editions, I encourage you to do so right away. Run, don't walk. Check out Options Playbook Radio. And while you're there, of course, Trading Tech Talk, all of this furor over Flash Boys. What is HFT? What does it mean for the marketplace? Are the markets rigged against you? We discuss all of that and a lot more on Trading Tech Talk. Check out those programs wherever you find this fine program. And while you're there, make sure you stay around to download our brand new mobile app. You can, of course, instantly stream all of the episodes of the Option Block, all 300 plus now, quite a few. So quite a bit for your listening pleasure there. You can download them for offline listening. You can even hit that feedback, hit that question button, and shoot your questions, your comments, your insights directly to the host of your favorite program. So if you're listening along, you say, you know what, I really don't agree with that, or you know what, I really do agree with that, or I have a question. What does that really mean? Hit that button, shoot your questions off, and we'll have a great time answering them and discussing them on our various programs. All right, check it out, the Options Insider Radio Network mobile app. I do believe you are going to like it. And joining me on the old program today, we're having some fun with the old Skype machine today, so we're working on getting everyone connected. But right now, the only one whom the Skype gods seem to be smiling upon is the Rock Lobster himself, good old Andy G, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, sir.
You know, Mark, thank you for having me. I find it ironic that the lowest tech state in the nation is the only one where Skype works properly. Have you noticed that? Has the irony hit you yet?
I think
like a lobster cage.
I think the lack of the super hardcore Option Pit firewall is certainly a factor in your favor on this one.
That could be it as well, since we do not custodian any funds like all those other guys do.
Yes, those OX guys tend to lean on the side of security, and guess what? Doesn't play well with third-party people trying to get in there. So
exactly. Good for their money, not necessarily good for the radio broadcast show.
Indeed. Well, we're working on getting that sorted out, listeners, but we're going to keep on rolling right on into our first segment, the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, listeners, you know what time it is. It's time to break down all the action that was lighting up the old tape and moving the old street today. It was, in general, from a broad market perspective, a pretty boring day. Most of the major indices pretty much unched on the day, but there was some action in earnings land. We saw earlier this week, of course, Tesla lighting up the old tape. People had been pricing in, looks like about a 10% or so move with that straddle. Tesla, as is the case often, exceeding that and then some, shall we say. Closing today, as we're recording this, on May 8th, the stock closing down about a little over 11% or 23 handles to 178. So perhaps the bears finally able to sink their claws, sink their teeth here into Tesla. But, we've seen this play before, Andrew. It gets crushed, and then bam, here come the bulls out in force again, and they just gore those bears with their horns, and the stock keeps rallying. I'm sure a lot of your clients have been pretty active out there in Tesla of late. What's the official pit take on what's been going on out there in Tesla lately?
Most of our clients just don't like
Really? That's surprising.
on the stock. As far as, it's not that, I mean about it as a directional play. No, there's been some, we've had clients doing just different things in it, like, it was like a decent calendar play for a while, like really tight calendars and things like that prior to earnings. There's been a few good plays on it. Nobody's liked it from the long side though, really. Not since the $60 days. We had a couple clients doing risk reversals in there that did really well. But since then, it's been sort of a variety of just trying to sell some juice one way or another in there. It's not one that we look at a lot because, the vol in general, the vol's pretty fairly priced to a little expensive, but for a lot, Tesla does move a lot, so it's hard to really, get those vol selling trades that kind of come into our under our radar, essentially.
Other big names taking it, I shouldn't say big names, perhaps little names taking it on the chin today. We saw Dendreon, a name we talked about in the odd block in the past, one of our little biotechs. Had been doing fairly well. We rallied up to around $3 of late, taking it on the chin over the last few sessions. Coming into earnings, they had earnings for the open this morning. They were trading close to $3 recently. They got cut down to about 2.5 over the last few sessions. And today, taking it down even further, another 33 cents to around 2.10. So down nearly a full handle or nearly a third just in this past week. People not liking the future there for Dendreon. I know a lot of our listeners like to play in these little biotech names. This one has been a pretty fertile ground for premium writers of late. Hopefully, you guys had some risk mitigation on in there with this thing taking it on the chin. And of course, a lot of OX clients like to watch and play around with Priceline, and that one also taking it on the chin, announcing it today before the open. And only taking it actually to the tune of 2%. I think a lot of people have been pricing in a little bit more movement out there. I'll have to pull up some straddles to see exactly what we're looking at going into the earnings. But Priceline in general, perhaps underperforming what some people had expected. Senior Andrew, do you guys play around in Priceline at all?
Yeah, we were looking at it. It had a big move intraday. It had about a 60-point intraday move, actually. So it traded as high as 1150 and as low as like 1085 on the open. So it was a little swingy. We didn't trade it for earnings. Mostly there was some fadage when it recovered a little bit today. And like all of these, I mean, you look at every chart of these momentum stocks at the end of the day lately, it's okay, there's a little rally in them and they just slowly and quietly just go away. Nobody cares about them anymore. Kind of sad, but I think that's somewhere along the line. There's a giant rotation going on where all these pension funds, I think, that have owned these stocks and have ridden them up for so long, they're like, you know what? Our pensions are funded. We're going to take our money. We're going to go. We're just going to buy some treasury bonds now and just chill for a while. Of course, there will be the big treasury panic probably in 5 or 6 years. But for the meantime, these momentum stocks definitely are having a very hard time. Let's just say keeping their momentum.
And listeners, we are now joined better late than never by good old Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, we were just breaking down all of the various earnings action that was lighting up the old tape today. What was lighting up your personal tape, the old BBI, if you will, over there at RCM?
Well, a couple things doing that. I'm sure you guys talked about Tesla and how that one. I actually had a client that's. This isn't one of my recommended trades, but he's doing it as one of his spec trades. And so he called me up and said, what we need to do is call Tesla to go sell some more cars. We need help with this stock. So, but aside from that, just on the personal tape today, I think I fell asleep today watching gold. It was probably the most boring gold day I've ever seen in my life. But then looking at the S&P, whether you're looking at SPX, SPY, or the mini, whatever the case may be, made me think of Grigas a lot today, and that I kind of wish I was a day trader. It's down, it's up, it's down. It looks like it was going way down, then it comes back up towards the end of the day. I would have loved to have been a day trader today. Looking at the long-term treasuries, TLT coming down today a little bit. Looked like it was going to be up a little bit, but then probably around a little bit earlier in the afternoon, it just kind of had a drop. And with that, the VIX doesn't move. I shouldn't say that. The VIX at the end of the day from start to finish is relatively unchanged. So interesting day in that the correlations weren't quite there in a lot of ways. The other thing with which I was looking at, there was news out of China and that things are a little bit better than what they thought they were going to be in China. So our FXI positions benefited, not a lot, but an up move is never one thing with which we'll complain about when we're long by any means. So a lot of things going on, but nothing shaking the apple tree too greatly today.
Just getting back to the Priceline tip there for a second. I was pulling up some of the info on that, and it looks like it went out at about $63 or so, around $60, that at the money straddled. And you're right, Andrew, it had quite a range today. So this gets back to what we've said many times. At first blush, it seems like the premium buyers didn't do that well. But then again, once you factor in the intraday range and the ability to scalp, and hopefully you scalp somewhere near the edges of those ranges, you were fortunate enough to do so. If you did that, you may have fared all right. But again, this kind of gets back to what we said on the show many times, why it's so hard to really trade this stuff on a retail level and do it well. You have to have the account margin free in your account to be able to sling the stock against it. It's a difficult trade for retail. Again, why we've argued many times on the show, maybe you just get all these positions wholesale going into earnings, because it's just it's a crazy thing. You want to ride some of that gamma, ride some of that vol going into the announcement, that's fine, but maybe you take it off that morning or that afternoon before the actual announcement. Seems to be a much easier road to hoe for a lot of our listeners. Other things lighten up our collective tapes. Since the last time we recorded here on the old program, of course, we had a pretty dubious milestone in the marketplace. I'm talking about the 4-year anniversary of the flash crash. I'm not sure if I ever told you guys my flash crash story. I will tell it to you briefly here. I was actually out at a meeting with someone who was a risk manager for a very large prop trading firm, and we had decided, we had been planning for months. He's a cigar guy, I'm a cigar guy. It was a nice day. We thought, hey, we'd meet out in the newly re-landscaped area around the Art Institute there in the park to have cigars. It was a lunchtime cigar. I never do this. I thought, hey, what the heck? I'll break my mold. We'll go out. I'll meet this guy for cigars. So we go out there. We meet for cigars. We just light up. We're about 2 puffs into our very rare, I've never done this since or before really, lunch intraday cigar. And he looks at his phone, I look at mine, and I say, wow, this is interesting. The market seems to be selling off a little bit. I think that at the time, the SPUs are off a little bit. The Dow's off about 100 points. We kind of shrugged it off and kept talking. Another minute goes by. He looks at his phone again and says, I might have to go. And I looked at my phone, and I said, yeah, I think I might have to go too. So inadvertently, I may have cost that poor fellow his job, because it was not exactly the most opportune day to be out of the office. Of course, the flash crash, the day when the markets really took it on the chin in many perspectives. We've still been dealing with the fallout of that ever since, looking at different circuit breaker rules, looking at different rules for busting trades, looking at different rules for obvious errors in the options market and what types of trades should be busted in that types of environment. A debate that's still very much ongoing. But I'm curious for both of you guys, dealing with your retail clientele and the type of input they give you and the questions they ask you. What's their feedback on this? Are they even aware of this? And what's your take? 4 years later, are we any better off? Or do you think retail is still up to the same thing and the firms are still up to the same business, and this could easily happen again and wipe out just as much capital as it did last time? Perhaps we'll start with you, Senior Mike.
I'll never forget where I was the day of the flash crash. Kavanaugh and I were still in the on the Jackson Street office, and there's a lot of hedge funds that were on the same floor that we were at the time. And just in the background, you hear through the walls, "Son of a bitch, motherfucker!" You hear stuff like that left and right. It was unbelievable. I remember when I think I had left the room for a second. I come back into the office that Mike and I were sharing at the time, and he just looks at me with big eyes and says, "We're at war." And I'm like, "What?" So we look at it, and so first thing we did is we pretty much everything that we had was hedged at the time, and we didn't have any naked options. So first thing we did was just make sure we didn't screw anything up just out of a reaction, because when you see a market going down that far, we just wanted to make sure of everything, and we were fine along those lines. And then what was interesting was we had a gentleman call us, and he was a guy that was trading his own account, and he just wanted to see some help with an order. And so he said, "I got to buy some puts to protect this condor that I'm in." And so this was a 7-figure account with which this guy had. And he wasn't doing just 5% of the account as a condor trade or whatever. This was pretty much his condor account that was 5 to 10% of his net worth. And so as he's calling, he says, "All right, I need you to buy me some puts to protect it in case this is bad." So I'm like, "Okay." So he gave me the put order. It was on RUT. And so I said, "I have it as a limit here, but this bid-ask spread's a mile wide." He's like, "Just put it in market. I don't care." I'm like, "Okay."
I don't like where this story is going, Uncle Mike.
It has a happy ending, believe it or not. So anyway, I have it sitting out there as a market order, and it is not getting filled. And this is on, I think it was like if memory serves, it was on a 50 lot on a fairly in-the-money put on RUT, and we were trading through Options Express at the time. And so this market order is not getting filled. And so I call up Options Express, who was extremely professional at the time, which they always are. That's who we were working all of our trades through at the time, or Brokers Express, the sister company of Options Express at the time. And so they're like, "I know, we're calling all the exchanges. These things are not filling. These long puts are just not filling on any of the exchanges right now." So I'm like, "Okay." And then the market starts to come back, still not being filled. So the guy calls me back, and he's saying, "Is there by some stroke of luck that I didn't get filled on that put?" I'm like, "You didn't get filled." And he's just screaming, "Cancel it right now." So I call up Options Express, cancel it. And so by him not getting filled, I think we estimated that saved him like $60,000 by not being able to buy that put option at that point in time. So when things like that happen, folks, the thing with which you have to be aware of is that if you're short premium, there might not be liquidity. And this was not, Options Express was doing everything with which they possibly could. This was an issue where no one was filling any options at that level to buy puts, at least in our experience, on RUT, which is it's a liquid contract. And his plan of attack for his condors was that he was going to buy puts if it went down. I don't remember the exact strategy, but a very vital part of it was to do that. And so when stuff like that happens, that's something to where even though it's a rarity, you have to be prepared for it.
That story could have very easily had a much worse outcome to that. A market order. You used to say the words market order and flash crash, and I just tense up. That's awful. That's about the worst case scenario from a risk management perspective. But yeah, it sounds like the incompetence and just general madness of that day seemed to work out in your favor that day. So well done, sir. Tip my cap to you, Mr. Andrew. Any other salient points from the flash crash anniversary?
No, actually that was like a 2-year period where I really wasn't trading much. So I personally did not live through it, although I've lived through a couple of crashes. And I would just say, reiterate what Mike says, the time to have a risk management routine is not to come up with one while the market is crashing. I would say that is a little late at that point. So, like Mike said, we just check what we had. Is everything we have okay? Well, yeah, it's okay. And then you can go on. So if you can't look at your positions when the market's blowing up and you feel okay, then you probably should rethink about how you have some of your stuff structured. So, but I'll just say there will always be technical problems. The HFT things, I think, definitely don't help because they flood the exchanges with lots of quotes. And I think the system just has a hard time trying to get done what it needs to be done. Just like not getting filled wasn't because there weren't people out there making markets. It's just somehow electronically there was just too much junk in the way for that stuff to run properly. So I have a feeling we will see some kind of fix on this situation as time goes on. But they are electronic markets, and they will go down. No matter what they do, no matter how robust they are, they will go down because that's what happens. You know, when you don't have manual trading, where you always have somebody that you can call, and you're in an electronic marketplace, somehow somebody can turn the lights off. So that's just how it is, and I don't think that will ever change.
Yeah, you remember the old stares you used to get from the broker if you tried to leave the pit when things went crazy. That was a definite impediment to the market shutting down. Now you don't have that. You're on a desk somewhere. You hit that off button. Maybe you get fined, but it's a hell of a lot cheaper than whatever it's going to cost you. So it's a no-brainer for a lot of those firms.
Plus, brokers used to remember.
Yes,
They're
yes.
Like,
you skipped out when I had to fill all these puts. You're not getting anything now.
Exactly. And he makes you pay for the next 6 months after that. So
that was the unknown circuit breaker in the marketplace that kept everyone safe. Was the wrath of the broker.
The system did work.
The anonymity of the marketplace now working against us all. But it does play back to that other big hot topic everyone's talking about these days, of course, HFT. It was indeed a topic back then, too. A lot of people pinning the severity of the drop, like you said, Andrew, and the fact that a lot of these firms who are making quote-unquote liquidity now are flashing in, and they're doing the HFT-type trading, so they could easily turn it off when they want to, and that exacerbated the extent of the crash. A lot of people going back and forth post-Flash Boys. Are these liquidity providers? Are they not? That's an endless debate. We won't get into it here. Again, check out Trading Tech Talk if you want to hear more about that, or if you're really curious about that, you want to hear what all the different exchange and industry leaders have to say on this topic, then check out all of the content we're putting out right now from the Options Industry Conference I just recorded last week. I sit down with all of the heads of the different options exchanges, a lot of the trading firms, research arms, whatever the case may be. We really pick their brains on a lot of these salient issues. Check them out. Pretty interesting stuff that's coming out. Wherever you find this program, you can look for our Options Insider Radio program or get our network feed or indeed get our special conferences feed. You can get all that content over there. All right, and now it's time for us to keep on rolling right on into our next segment, the Odd Block.
It's time to break down interesting, downright questionable options activity identified by the OptionsInsider.com. It's time for the Odd Block.
Everybody, that funky tune means it is time once again for the Odd Block, the portion of the show we break down the weird, bizarre, and just downright unusual activity that's lighting up the options market today. Going to start things off with Brightburn Energy Partners LP. That's right, BBEP. BBEP is back. Everyone's favorite, good old BBEP, closing today about $20 even, off a couple of cents on the day. This is the name that does about 700 contracts a day, doing nearly 3,000 today, so about 4 times their typical volume. And what we saw pretty much were size put sellers. In particular, on the June 20 strike, we saw 2 big blocks going up of these June 20 puts for about 50 cents, it looks like, on the day. Total of 2,500 contracts. That is against open interest of about 4,500. Looks like this is probably closing, given the fact that this is one of the few strikes with any substantial OI going on here. It went up, though, marked as a buy right, which is kind of interesting. Senor Rock Lobster, which way do you fall on this hot put action out in BBEP?
This is like a confusing trade. I think it's somebody that's trying to do a dividend capture, buying stock, buying puts, even though it was marked buy right. I think they just marked it because the puts went up with the stock.
Oh, so you don't think these were sales? You think these were buys?
I think so. But, I could be wrong. They did trade on the high side. And normally when the options trade that high, you would have to print the stock really high because that's 15 cents on the options, and it would have been way, way up for the stock to print that way. So I don't know how you could put the print up, I guess, but the way that it pays a dividend every month, it looks like this is just a little divvy capture play where they're trying to get the stock to pay. However, all that being said, I look for the open interest tomorrow to see if this wasn't somebody unwinding that type of trade already, which is possible. So it's just, there was a lot kind of going on. It was hard to sort of figure out with this one. I have to be honest with you. I'm pretty sure it was a buy put buy stock to capture the dividend, and it's somebody that looks like they have been doing it. But this would be an open interest checker tomorrow to see how this whole thing would pan out.
Buy puts, buy stock would make a heck of a lot more sense. Again, this does fall into, that's why I don't trust those conditional trade tags whatsoever, because they're always garbage. They go up marked as buy right, even though on the surface it probably makes a little bit more sense to be leaning the other way. Either way, listeners, when you're playing the home game, you can check tomorrow for yourself and see exactly what went up out here in good old BBEP. I just like saying BBEP. We should have it on the show every week just to have an excuse to say it. All right, next up we have Cameco Corporation, another newcomer to the old odd block, ticker symbol CCJ. Another one trading around $20 and change, $19.91 here. This one does actually some fairly decent volume from an odd block perspective. You're usually talking 200, 300, 500 contracts. This one doing about 5,500 contracts a day of late, so pretty substantial, and doing far more than that today, doing about 75,000. So just size paper out here in Cameco. And in particular, what we highlighted on the site was a pretty sizable spread. We saw rolling on out there to the Jan 2015 and Jan 2016s. We saw 32,000 of these Jan 2015 25 calls going up for 65 cents. And then the other side of the spread going up nearly 40,000 times on the Jan 2016 30 calls. And these ones went up, again, nearly 40,000 times for about $1.05 here on this spread. Again, size open interest on the Jan 2015, 61,000, negligible on the Jan 2016. So it seems like we're seeing the old roll up and out. Is that your take as well, Senior Rock Lobster?
You know what? That is my take. This is a very interesting stock. And everybody's like, gee, Andrew, why is it an interesting stock? Well, I'm not really a chart follower guy, but it has these kind of sharp, snappy moves. And I guess it's just the nature. It's some sort of exploration stock or something. But it looks like the customer is trading this paper to try to take advantage of that. It tends, when it moves, it tends to trend really strong for like a month, and then it kind of dies. So that's why I think that they're able to buy. Because when I first saw the trade, I'm like, okay, you're selling the 25s and buying the 30s. Good luck with that. They're $10 out of the money on the $20 stock. You're not going to ever make any money on them. But I think, whoever the customer is trying to catch this one. Right now, it looks like it's kind of in sort of the steep downtrend from like 26 to 20 or something like that. And I think they're looking for the big bounce up there again. So they're rolling up. So anyway, that's it might work with a stock like this with the nature of how it tends to move. But the moves are kind of very trend-like, but they're longer term. They take like 3 to 4 months to kind of build. So it would make sense to trade a stock like this in that fashion. So, but yeah, definitely a rolling up and out. I don't know if he made any money on the 65s. I'm sorry, on the 25s, because the stock right now is trading at a near-term low. So he might be just taking his medicine on those and trying to a strike and just say, I'm going to hold on for the run a little later.
I think he's taking his lumps there and trying to add a little bit more time. Please, Mom, give me another year. I'm sure it'll happen this time.
It'll work. It'll work.
All right, next up, a lot of good names on the odd block today. This is Deluxe Corporation, ticker symbol DLX. I kind of like that. They closed today $55.45, up about half a buck or so on the day. Another name that does some size volume, 141 contracts a day, doing about 3,000 today, so a little bit more respectable today. In particular, pretty much all of that activity, except for a little bit on the Julys, was concentrated on the May double calls, the May 55s. They went up 2,404 times to be precise. These went up pretty much in one block, so that is interesting in and of itself. Obviously, someone looking to take off some of this size open interest. You see on this strike, 7,263 to be precise. That is a sizable amount of open interest on a stock that does 100 some odd contracts a day. You look at every other strike out here in every other month, and you see a couple hundred, maybe 10, 50, and then 7,000. Clearly, this is probably closing. Looks like they went up for a slight premium over parity. Could be someone coming in here, closing out some of their short now in the money calls ahead of a big dividend coming up. They have a dividend announced on the 15th, so it seems like someone taking some of these off ahead of that big divvy looming on the horizon. Again, we've talked on the show many times in the past, the perils of being short calls ahead of a big dividend like this. This guy obviously taking some of that advice to heed. Senior Rock Lobster, what's your take here in Deluxe Corp?
Definitely they got to close them, and they're running out of time. So it feels like the initial paper was like the buy side. They're buying these things. They think there's going to be a rally. We're running out of time. They're starting to get out. And I don't think they want to exercise for the dividend. At least that's what all this selling paper looked like today. So they're kind of running out of time. They got a dividend. It's just one of those things. So they're not getting the bounce. Like Deluxe is trading at a high, it's at a near-term high. I just think it's gotten a little stuck for them at the strike, and they needed to kind of giddy up at this point.
Speaking of giddying up, we're going to roll on into our final name here in the odd block, Frontier Communications Corp. We're going to ride on out to the Frontier, ticker symbol FTR, closing about $6 or so on the day. And this is the name that does another fairly decent odd block name, doing about 3,000 contracts a day. On average, lighting up the tape for nearly 12,000 today. And what we saw in particular that caught our eye today was a pretty sizable closing put seller out here in FTR, in particular on the May 6th strike. When we profiled it, we profiled about 1,900, nearly 2,000 of the May 6 puts going up for a dime. By the end of the day, it was probably about 5x that, or a little over 10,000 total on the day against open interest of 12,000. Surprisingly, there still is a dime bid out there for more. So someone looking to take advantage of that, close out the rest of that open interest. There is a bid for you. This is interesting. They are a little bit in the money. Seems like it could be an aggressive close here. Senior Rock Lobster, take us home here with these puts trading in FTR.
Well, this to me is like a curious close because the stock literally was $5 a month ago, $5.40. It's trading at near-term highs, and you want to exit all those puts for a dime? At this point, would you want to dump, if you had 4,000 of those puts, would you want to sell them all for a dime, like right now when you're right at the strike?
Yeah, I'm looking at this chart, and you're right. Just back in mid-March, it was, and even later into almost April, it was $5 and change, a low $5.06. So you're right. I wouldn't be racing to take these off.
So okay, I'm going to take them off now. So this would be a trade. You got to assume there's something against it. They're long stock or something, and they're like, okay, I'll just keep the stock. Things are going well, but there's only 6 cents of extrinsic value in at this point. So I mean, it's still, if you have 10,000 of them or what, that's still a lot of money. It's $100,000, but the market could go down. I mean, the stock could trade 575 and it'd be worth a quarter. So I just found the breadth of hitting this 10-cent bid I thought was a little odd to me. Thusly, it is on the odd block today.
Yeah, you'd think if he wanted to keep that position and reestablish, he would have rolled out to a farther month, but no sign of that. He's just closing these babies as fast as he can. I guess he said, a dime bid, I'm going to take that. Even though you're right, with puts like these, you probably put them on hoping for a little bit of a move, and this might be your chance, and he's taking them off. Again, though, only 9 days to go. They're a little more than a weekly at this point, so maybe he felt quite lucky to have that dime bid sitting there. 6 cents over parity. I don't know if that's the best trade ever, but hey, clearly he might need some capital in his account. And he said, I got these sitting there. I forgot about all these 12,000 Frontier puts. Let's get them while the getting's good. Either way, interesting stuff. Very odd. Again, that's why we profile it here in the odd block. If you'd like to hear a little more, read a little more about all this kind of fun activity, then you know what to do. Surf on over to theoptionsinsider.com. You can read a lot more detail about these alerts we don't have time to get into on the show, as well as a lot of other unusual activity on the old website we didn't have time to profile here on the show. This is just a taste, a wee morsel of all the fun, unusual activity content we have over there on the optionsinsider.com. And if you like this kind of stuff, we may be in the works of cooking up perhaps an unusual activity show. So keep your fingers crossed, and maybe we'll have one of those out there for you. But in the meantime, we have to keep on rolling into our next segment. But before we do that, usually this is the point of the show where I toss it over to the Viceroy and say, hey, Alex, take us behind the scenes over there at OX. Alex could not make it. As I said, the Skype God is not smiling on him today. So in lieu of that, I will just remind all of you guys, check out all the cool tools Alex has been talking about on the show of late, in particular, single leg walk limit. I know a lot of you guys have been writing in asking, when's that coming, why do spread guys get all the love? Well, now you're getting some love, too. It's coming soon. Check it out, optionsexpress.com. For all those cool tools Alex is always talking about, as well as all those free webinars. I mean, it really is kind of ridiculous at this point how much free stuff they actually put out there. You don't even have to be a client to get all those webinars, get access to all that education. It's pretty impressive stuff. Surf on over to optionsexpress.com to find out for yourself. All right, and now, usually this is the part of the show where we jump into the mail block, but we're flipping the script this week because Uncle Mike is dying to get into some strategery. It's time, once again, for the strategy block.
It's time to dispense options, wisdom, and education. It's time for the strategy block.
All right, that funky tune always gets me jazzed up for the strategy block. Uncle Mike, whither shall you lead us today? What is the topic for your block of strategery?
The block of strategery has to do with calendars versus verticals again today. I want to revisit this because I think this is something that's very important at this stage in the marketplace. Last week we did a survey, what the listeners were thinking more along the lines of verticals versus calendars, and the results will be released shortly. But what I want to go through today is my opinion on the market as a whole, not individual stocks, because there's always individual stocks that buck the trend. But on the market as a whole, it's a pretty deeply held belief of mine right now, and the U.S. stock market anyway, for the S&P stocks, that I think you're in a better position if you're a premium seller to be doing calendar spreads or diagonals for that matter, as opposed to verticals.
Let me cut you off right there, Uncle Mike, because I wanted to mention earlier, it's ever since you guys did the show last Thursday and hosted it, we've been getting all kinds of feedback on this, and I had no idea what people were talking about because I hadn't had a chance to actually catch the show myself. So let me just interrupt your strategy block with a couple of mail block comments from some of our readers and listeners. First off, we have Erik Ruehr who writes in and say, I'd say vertical spreads are better now. Thanks for the show. And that seemed to be the comment, the thought du jour, because other people kind of pouring in with similar type topics. I didn't filter them all here, but just have a few of them here. We have Tom S. He writes, this email is in response to Uncle Mike's survey. In general, I'd say vertical spreads are trading much better now. And last up, we have Eljo, yes, he writes, put me down in the plus column for verticals. We have more of them in there. Those are the three I surfaced. I wasn't sure what they were writing in about, so I'm glad you can clarify that, Uncle Mike. And it seems like a lot of the listeners are in the vertical camp right now.
Oh, I would walk that line with caution, folks. And here's why I say it. I just want to give you a real-world example of just how I was doing some analysis the other day on. on this. And this is an actual real trade with real people's money. This is part of the core of what I do. And what we're trying to do, just to kind of go over the position, we're long a 6-month put that's no longer 6 months anymore. It's going to be rolled pretty soon anyway, for protecting a position on SPY. And what we're trying to do is use shorter term spreads as a means of financing that put option. And by shorter term spreads, I'll go over what I'm doing here in a moment, but we're trying to make it so that the upside's not limited on the underlying. And we're also doing this against a call with which we own on SPY as well. So in doing my analysis the other day, just looking through this, if I want to get any type of premium, let's say I want to get 50 cents on a weekly option spread. That's what I'm looking to make, let's say. I would have to go, and this was when I was doing the research a couple days ago. I don't have my notes in front of me of what I did, but I would have had to have gone probably maybe $1 below where SPY was. So a 10-point move on SPY and my 5-point bull put spread that I would have been putting on it would have gone in the money. Now, you could say, well, Mike, maybe you shouldn't be doing weeklies, you pinhead you should be doing monthlies. Well, I was getting similar results on the monthly side of it as well. So what I wanted to do is create some type of a spread with which we could have positive delta and still have time decay working in our favor. So with that being said, I want to be at a stage to where the overall position isn't costing me theta day in, day out. So the only way with which you can come up with something like that is by doing something along the lines of either a calendar or a diagonal spread. Just because of the fact that my opinion on SPY anyway, which I follow very closely, is that in order to sell a put or even sell a call for that matter, if you want to sell a call spread, you'll have similar results in my opinion. It's just too close for comfort. And so what I ended up doing for this week, I ended up getting out of the trade today, is I did the 188 May week 2, which is this week, and then June week 1, 188 call spread. Now, we got out of it today for a profit and this was, we got into this on Monday, and so we got out of it today we got into it on Tuesday. We got out of it today for approximately 15 cents of profit. So not a lot. We were hoping to get a 50-cent profit, but I'll gladly take a 15-cent profit over a $4 loss any day. But my point is this. Let's say the market, and it was slightly bullish. It was slightly out of the money when we put it on. So we had a little bit of positive delta on. So let's say that the market would have gotten fried, meaning we would have had a 10 or 20 point down day, which is possible. And I'm not even talking about a doom and gloom flash crash scenario. I'm talking about a 10 to 20 point down day. Well, with that being the case, I don't have to worry about my put spread going in the money because I don't have a put spread. I only have $1.60 at risk for that specific trade instead of having $5 of risk like I normally would. And you can draw the scenarios whatever way you'd like. You could say, well, I think you should only have $2 of risk on spreads. Well, that's fine, but then you could still get a more beneficial calendar spread. So I'm just trying to stay at the conceptual level here, folks. If the market were to go down, we had a limited risk on it. Now, granted, if we would have had just a raging bull market to the upside and I didn't get out of that calendar spread in time, then I'd have missed out on some profit. Whereas in the put spread, I would have been fine and I would have been able to take my full premium profit, so to speak. However, it's my opinion that right now, because of the fact that volatility is at a lower level, my opinion is that vol's low. I think over the course of the next few years, it will go higher. I think we're at the lower end of the curve on the yearly time frame, so to speak. I think because of that you're in a better position from a risk-reward standpoint to be doing something along the lines of calendars or diagonals because of that. You can still get time decay. You can still get theta working in your favor, but you have to do stuff, as a wise man once said. And so when you have a calendar on, I will be the first to admit it is a lot more work. And the BBI levels definitely increase when I have a calendar on as opposed to just a vertical. The vertical, you just say, okay, so long as it doesn't go to this level, I'm fine. I'm not doing anything. But with a calendar, well, if it goes down, I have to do this. If it goes up, I have to do this. If the vols change, I have to do this, that, or the other. So it's definitely a lot more work, no doubt about it. I prefer to do verticals. However, in a market like this, I don't think it's worth it from the risk-reward standpoint. And that, my friends, is one to grow on for today.
Again, I missed the full extent of the survey last week, but I'd have to wager that. That's why a lot of the listeners are weighing in on the side of verticals. It is much more of a set it and forget it type strategy. Not that all of our listeners are going to do that. Not that they're going to just put it away and forget about it. But it is a much more approachable and easily encapsulated type strategy where you're right. The calendars and diagonals, they get into a lot more babysitting. And if you have a day job, this is not your full-time gig. Managing all that gamma and theta and vega, it can become a full-time job. So I think that's why I have to, if I had to hazard a guess, I would say that's why so many of our listeners fall down on the vertical side of the fence. If I'm incorrect, listeners, feel free to set me straight. You know how to do it. Surf on over to theoptionsinsider.com. Leave us a comment or a question in the show notes there. You can find us the old-fashioned way. Shoot an email to questions@theoptionsinsider.com. Just be sure to put question or comment for the option block in that subject line there. A lot of you guys love the social media, twitter.com/options, facebook.com/theoptionsinsider. Easy to find us there. And, of course, last but certainly not least, our mobile app, probably one of my favorite ways for you guys to get in touch with us these days. A lot of you guys are doing just that. Listening to a show, hey, I don't agree with that. I can't believe Mark just said I like verticals because it's a set it and forget it strategy. Hit that button, fire it in, let us know your comments, your questions, your feedback. We love to hear all of it. All right, and now we're going to keep on rolling right on into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. This is, of course, the portion of the show where we tell you what we're keeping an eye on for the rest of this week. Into the old weekend, not a whole heck of a lot of major earnings left on the calendar, but there are a few. Uncle Mike, cover your ears. Cisco is coming out next week on the 14th. Oh, the pain. Have you forgiven them yet, or is that still your Waterloo, your Vietnam?
Well, as a Christian, I have to believe in forgiveness, so I guess I'm going to have to now.
I like that.
But I don't
like
want
that
to.
Notion of Cisco being your Waterloo. It just strikes me as humorous for some reason. All right, we also have Agilent on the 14th, and of course, one of Andrew's favorites, Take-Two in the gaming side, coming in on the 13th next week. All those pretty much after the bell. All right, like I said, the Viceroy can't join us. I'll do a quick Viceroy impression. Macro, 10-year, 30-year, and the Fed. Okay, Andrew, your turn. What are you watching for the rest of this week? No offense to the Viceroy, of course.
Oh, no. It was good. I realized vol's still low. Looking, and I agree with Mike, like this is kind of a time spread type market. A lot of premium in the futures, bumping around a 13 VIX, but the market's really not moving. I think the only thing that's really is, whether like kind of the social media tech momentum-y type stocks can hold up. I don't really think they're setting up for a bounce, so I think kind of selling some of the upside stuff in there. Like almost every rally they have now, I just don't see those levels anymore for a while until there's some big earnings momentum or something. But you've got a whole quarter to wait for that. So I just think there's a lot of deadness on the upside. Doesn't mean we can't rally. I just think, trades where you're sort of kind of owning more sort of near the money, but selling junk sort of options calls out of the money make a little more sense. Sort of like, Mr. Tosaw's funky time spreads, but those are definitely the type of things I would be looking at this point right now.
Do you agree that a lot of listeners probably are favoring the verticals because it's just more of a encapsulated type strategy?
It is. I think a time spread is a real nuanced thing, and if you'd never traded them, I think because you've got the positive theta on the one end and you've got long vega on the other, if you don't really understand, you are buying some options because you are net long vega, even though net contracted's flat. So it has a nuanced approach. A call spread is pretty easy to understand. A vertical spread, you buy it, you watch the thing go up. The problem is in a market that doesn't have any real momentum, since that trade is long gamma, it kind of suffers. And the reason why Mike is looking at a time spread is because, we go up a little, we go down a little. The time spread type of trade thrives. and the vertical dies. So I think he's 100% correct. That's kind of the stuff that we've been looking at. And for the most part, it's working okay. So that's, I agree. I guess I'll just say I'll agree without over Alexing it.
All of us just beating on the Viceroy when he's not here. Oh,
I know, it's so lame of us. He's not here, and we just crush him.
All right, and last but not least, Uncle Mike, what are you watching for the rest of this week into the weekend?
I want to see the S&P make a new all-time high. I want to say it's never been a better time to sell than right now, but I haven't been able to say it lately. So I'd like that to happen. But until then, I'm treading these markets very cautiously just because of the fact that the markets keep teasing us and making us think that we're about to make a new all-time high, but they don't. So I'm still continuing to watch that. With TLT coming down a little bit today and just the long bond, watching that. And then also, of course, watching my beloved Apple to see what the weekend's going to bring and see if it can weather the storm of the NASDAQ coming down.
You excited for the big iWatch announcement on Sunday? That should be pretty good.
I thought that was today.
Wait, maybe come out after the bell. Yeah, we'll have to check and see. Keep an eye on that one, sir. All right. You're getting immune to my scams there, sir, and my schemes. Good to hear. It's finally sinking in. After so many years. All right, and that is going to do it for the Around the Block segment. It's also going to do it, unfortunately, for this episode of the Option Block. But before we go, as always, let me check in really quick with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Like I said, the Viceroy couldn't make it, so be sure to surf on over to optionsexpress.com, click on that education tab, and find out all the great webinars and events they have coming to a town and a computer screen near you. Again, you don't have to be a client. That's how crazy they are. They just want to educate you about options. Check it out, optionsexpress.com/education. All right, Uncle Mike, what is coming down the block? One more time. All right, Uncle Mike, speaking of great free education, what is coming down the pike in the old RCM webinar choo-choo?
Well, we had to postpone our butterfly adjustment webinar a couple of weeks ago, but we will be having it on May 13th. So for more information, go to www.rcmwealthadvisors.com/webinar.
And how has the feedback been on the old Iron Flies webinar? A personal favorite of mine. I'm sure it did pretty well for you guys.
Yeah, a lot of people came out. It was a good time, that's for sure.
Iron Flies, always a good time. All right, and last but not least, Mr. Lobster, what is cooking in the land of the pit and the gold course and all that other fun stuff?
Well, we had our little gold course webinar last night. It was over-attended as usual, which is good. We're not launching anything new, although we have started our little chat service. For all those of you who are interested, surf on over to www.optionpit.com, or actually just send a note to Joanne at optionpit.com, that you're interested. So it's basically, Mark and I are starting it off. It's just a soft launch. It's only for people that are already Option Pit Live subscribers. So right now, if you subscribe to Option Pit Live, you get it for free. If you subscribe to the Gold Course, you get it for free. So it's basically an extra hour, basically from like 10:10 to 11 Eastern time. Mark and I kind of get the ball rolling of things we're looking at during the day. And we're having, clients actually start to talk to each other about trade ideas. And so they can sort of blossom and go along on their own directions. Instead of listening to us all the time, generating trade ideas, although we do an okay job of that. And it will be hopefully a service that people will be able to lean on when they have, questions, option questions, that they pop in and ask, because we've got a lot of smart people that are customers of Option Pit, and we're working on a way to kind of share the knowledge, as it were.
Good stuff, listeners. Surf on over to optionpit.com to check out all that fun stuff and much more. And on behalf of the Viceroy who couldn't join us today, and Uncle Mike and the Rock Lobster, and of course myself, who shall go nicknameless, I want to thank all of you for downloading and streaming and subscribing to the show and making it such a fun thing to do every week. And we'll see you next time right here on the Option Block.
The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.